Welcome to EPK Capital's Daily Market Briefing. Today is Wednesday, October 15, 2025. In the next few minutes, we will dissect the key market movements and macroeconomic events of the last 24 hours. Yesterday, on October 14, investors navigated a complex landscape of geopolitical tensions, central bank commentary, and key economic data releases. Let's start with a look at how the major indices performed. Global Indices Performance. In the United States, Wall Street saw a mixed session. The S&P 500 experienced a slight downturn, closing 0.2% lower at 6,644.31. This decline was largely influenced by a drop in several technology heavyweights. The Dow Jones Industrial Average, on the other hand, showed resilience, climbing 0.4% to finish at 46,270.46. Positive earnings reports from some of the nation's largest banks contributed to this upward momentum. However, the tech-focused Nasdaq Composite faced headwinds, falling 0.8% to 22,521.70. Concerns over trade tensions between the US and China weighed heavily on the technology sector. In contrast to the large-cap indices, the Russell 2000, which tracks smaller companies, posted a solid gain of 1.4%, closing at 2,495.50. Across the Atlantic, European markets were also mixed as investors digested the latest economic outlook and corporate earnings. Asian markets displayed a varied performance, influenced by regional economic data and ongoing global trade dynamics. Macro events and their market impact. Several significant macroeconomic events and political statements shaped market sentiment on Tuesday. Federal Reserve Commentary. Federal Reserve Chair Jerome Powell's remarks were a key focus for investors. In a speech, he indicated that a slowdown in U.S. hiring could necessitate further interest rate cuts this year. Powell expressed more concern about the labor market than inflation, suggesting that the Fed's recent rate reduction may not be the last. He also mentioned that the central bank might soon cease shrinking its substantial balance sheet, a move that could help to lower borrowing costs. These dovish comments initially provided some support to the markets. U.S.-China trade tensions. The persistent trade friction between Washington and Beijing continued to cast a shadow over the markets. China announced a ban on its companies dealing with 5 subsidiaries of a South Korean shipbuilder, a move seen as a response to the Trump administration's efforts to bolster the American shipbuilding industry. This development reignited concerns about the ongoing trade war and its potential to disrupt global supply chains, particularly impacting technology stocks like Nvidia and Broadcom. International Monetary Fund's World Economic Outlook. The International Monetary Fund released its latest World Economic Outlook, projecting global growth to slow to 3.2% in 2025. The report highlighted the dimming growth prospects due to increased protectionism and geo-economic fragmentation. The IMF noted that while the initial tariff shocks were smaller than feared, the ongoing uncertainty is dampening investment and economic activity. A key concern raised was the potential for a sharp repricing in the booming tech sector, which is currently being fueled by advancements in artificial intelligence. Economic data from China. Fresh trade data from China provided a mixed picture. The nation's trade surplus for September came in at $90.45 billion, which was below market expectations. However, this was attributed to a significant 7.4% year-over-year increase in imports, suggesting a potential strengthening of domestic demand. Exports also grew by a robust 8.3% year-over-year, beating forecasts. This data points to a resilient Chinese economy, though concerns about the property sector and consumer sentiment remain. European Central Bank and economic climate. In Europe, the euro stabilized after a recent sharp decline. The broader economic outlook remains cautious, with policymakers and investors closely monitoring inflation and growth indicators. The political climate in the US, particularly the current administration's stance on climate regulation, is also seen as a potential source of economic stress with global ripple effects. Major crypto news. The cryptocurrency market also experienced significant volatility, largely driven by geopolitical events. Impact of US-China trade tensions on crypto. An announcement by U.S. President Donald Trump regarding new tariffs on Chinese tech exports sent shockwaves through the crypto market over the weekend, leading to a significant sell-off. Bitcoin saw a steep drop, and the broader crypto market lost billions in value. This event highlighted the increasing correlation between digital assets and traditional financial markets, as macroeconomic and political news now have a more direct impact on cryptocurrency prices. Price movement of major cryptocurrencies. On Tuesday, Bitcoin, BTC, showed some signs of stabilization after the recent plunge. Throughout the day, its price fluctuated, experiencing a general downward trend with a dip of around 1.7% by the end of the day, trading at approximately £84,989. Ethereum, ETH, also saw a decline, with its price falling by about 2.6% over the 24-hour period, ending the day around £3,100. The price action for both major cryptocurrencies suggests that the market is still processing the recent news and broader economic uncertainties. Summary and look ahead. To summarize, Tuesday's market activity was a tug-of-war between dovish central bank commentary and persistent geopolitical and trade concerns. While positive bank earnings and the prospect of further rate cuts from the Fed provided some support, the ongoing US-China trade dispute and a cautious global economic outlook weighed on investor sentiment, particularly in the technology sector. Looking ahead, investors will be closely watching for the release of the U.S. Producer Price Index, PPI, for September, which is due out later this week. This will provide further insight into the inflation picture and could influence the Federal Reserve's future policy decisions. The evolving trade rhetoric between the U.S. and China will also remain a key catalyst for market movements. That concludes our market briefing for today. Join us again tomorrow as we continue to track the events and trends shaping the global financial markets.